In this week's Fastest 4 Minutes in Finance, the rise in personal wealth that may be fueling the economy and helping more people reach financial independence. Thanks for joining us this week. I'm Scott Inman. I got to be honest, it's been a little bit of a head scratcher over the past few years to see inflation drive prices higher, yet consumer spending continue to stay strong. How has the American consumer kept pace? Well, for a while, we were told it was the COVID money handed out by the government. Many workers built up savings during 2020 and 2021 and then used it to offset the higher prices in 2022 and 2023. And that was certainly part of it. We also know that wage growth has now surpassed the inflation rate, so rising paychecks have certainly helped. But what about a surge in overall wealth? I read a very interesting article this week written by David Kelly. He's the chief global strategist at JP Morgan Asset Management. He opines that the rise in the stock market and in home values has fueled consumer spending. JP Morgan estimates that the net worth of American households rose by $2.8 trillion in the third quarter to a record $157.2 trillion, or roughly $446,000 per household. Total net worth is up 11% over the past year and 47% over the past 5 years. Consumer prices have increased 23%, and income is up 35% over that same time period. The value of home equity has climbed by 83% over the past 5 years to $35.1 trillion. Breaking that down, there are 87 million homeowners in the United States compared to 79 million 5 years ago. JP Morgan estimates that the average American homeowner has over $400,000 in home equity, compared to $240,000 just 5 years ago. Now, Kelly theorizes that just the gain in household wealth over the past 5 years could fund 2.5 years of consumer spending. Of course, as he points out, it's not all being used for that, but an increase in home equity can be used for borrowing for more spending, and certainly investors could use their stock gains to raise cash for major purchases. The gains in wealth is also helping investors reach their retirement goals, even if they don't know it. A recent survey from the Employee Retirement Benefit Institute found that just 21% of workers said they were very confident about having enough money in retirement. That means the increase in household wealth may not have helped many workers feel better about retirement. We believe that feeling confident about retirement is connected to having a written financial plan, and the numbers back that up. The Schwab Modern Wealth Survey taken this year found that just 36% of Americans have a written financial plan. But of those who do, 96% say they feel more confident about their retirement. The increase in household wealth may be clearly helping the economy, but how is it helping your economy? Thanks for watching. Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.